Hey everyone, and welcome back to one more week and one more free trade idea from the Profit Flow Group. This is Coach JR, and today I want to take a look exactly what's happening with Apple, the company that tomorrow will have probably some new announcements, something new. But we always have to consider when we're trading the short-term reversals. This is not the end of the world. This is just, remember, there is liquidity levels that you have to build, and then you're taking profits. And when you see a reversal like last week, Friday was about minus 5%, that's not the end of the world. That's actually is giving you an opportunity to position yourself. Either you actually buy the stock, buy equity, or then you're looking for the different plays. 3 plays I have for you. Now, what we're looking in trading is not to win all the time. We're looking for a risk-reward ratio opportunity. That's what I want you to learn. And also to look for asymmetric big shots where you bet little and make a lot of money. That's what we're looking at the Profit Flow Group. So let me guide you throughout the charts and let me give you some ideas in this free trade idea. I think it's number 6, okay? Let's work on this. Let's go to chart. Let me minimize myself. And we're going to look at 2 different scenarios. We're going to look at the long-term view. If I look at the long-term view to the left of your screen, this is on the weekly chart. And then when you look at the daily chart, we have 2 positions. First, we can always have a thesis that we can say, hey, we're going to go back to this low, $123. Don't be afraid. This is just where we have liquidity between $124 and $123 per share. That's the previous level all the way back in June of this year. That's nothing new. We went through that level. We passed the level, and that's how we went from 124 all the way to 156. That gave us an estimated valuation of 27.95%. And that was beautiful. What we want to do is to figure out the next move in this particular stock. Now, to the left, the orange moving average. This one is exponential. Then we're using the 20. What we see is on different circumstances, for example, buying under the 20 exponential moving average was a perfect entry point. Now, last time that gave us about $26. That's 26 points, okay? Great. Now, if I actually experience the same from, let's say, this low or this second low, and I add another 26 points, where does it take us? That's what we want to know. Is it going to take us all the way to $170, $175 per share, estimated? So this is my opportunity as we speak. Friday's close is my opportunity to jump. That was my opportunity to buy at a 5% discount, a continuation in the trend. Look at what is the stock doing pre-market. Today, the stock pre-market is trading 0.78%. That's a 1 point appreciation, $1.16. And it's looking to open above 150. That will churn suddenly. That minus, actually it was minus 5 points. It was only minus 3.31%. You already see that this is turning to be just 2.5 to something. My message is that things can really change from Friday to Monday and going into October, and that's how we want to position ourselves. Now, look at this one more time. If you're buying this and you're expecting this opportunity, you still have some percentages on the table available to you. How do you play them? That's the question. Now, another view before I jump to the ideas I have for all of you in options is this. This is the breakout level. This is part of price rotation. And the idea I want you to keep in mind is this. If we use these levels as the point that we needed to break back from that high, January of this year, to have this continuation, then don't be surprised if we go back to trade at $145 per share on Apple. Because this was the previous level that the market, the participants needed to break, have that breakout for that in order for us to have that continuation to 156 and eventually all the way to $170 per share on Apple. So then again, you have a lot of liquidity in that level, 145 and 146, almost 147 per share. 147, 145. That's your liquidity level in the short term for you to find buyers and then take the stock, take Apple to the next level and a new all-time high at 170. How do we play this? Listen and pay attention. What happened is this. If you buy the equity, you need $150 per share just to look for something like this, 17.25% appreciation. And although that can be good if you have $100,000, that will be almost $17,000 in profits. And if you have $1 million that you can invest, you can take $170,000 in profits. That's beautiful and that's money. But if you're a retail trader, how do you maximize this? When you use the most effective vehicle to do that. The most effective vehicle to do that, where you don't have to take from your pocket $150 per share to buy Apple, then those are options. And I'm looking for a simple strategy. I'm going to bet on Apple continuation into the end of the year. So I'm just going to remove everything. And then I'm going to show you what I'm going to do. If that's the case, one more time, let me share with you this. If that's the case, if Apple, looking to the end of the year, still has a potential to appreciate between 14, that's 15%, to let's say another 20%, I'm going to maximize that return. How? First idea. I'm going to take to start the October 170 call, okay? The low of that contract is 30 cents. I can get it so far for 43 cents. Then based on options, that means that I only need to invest $43 per contract. I repeat, not 150, 1/3 compared to buying the shares. That's what it is, okay? So that's 43. Now, that will be my short term. Now, my medium target, it's, yes, Apple heading to the $200 strike. And I will buy the expiration, the monthly expiration, November 19 at a 20 cent. Last sale was 21 cents. That means I don't need $150 to bet on a potential bullish lag on Apple. I only need $21 estimated. The contract low was 15 cents. The contract high was 80 cents. Volume on Friday at a close, 1,231 contracts, and we have on the open interest 9,700 contracts, right? And then finally, what I'm going to do, I'm going to look the options for Christmas. I'm going to quote media, all right, AAPL, Apple, and I'm going to look for the monthly expiration in December. That's December 17. Option Shane, click there, all right? And then we're going to go to that particular one, December 17. Now, I'm looking for those options that are a long shot for a lot of people, but if volatility increases, if the stock rises at a good speed, then we're in for a surprise. I'm going to look for all strikes, and I'm going to look for that opportunity. So the last one I have is the 200, same for December. There is the 195, but it has less open interest. So I'm going to settle for same. The 200 strike, December 17 expiration. Last sale last week was 34 cents. It had a debacle of minus 24%, okay? And the contract low was 23. So I'm not buying too far from the contract low. And the contract high, my north, will be $1.06. Volume as of Friday was 265. But we have in the open interest, we have close to 4,450 contracts. So someone has been slowly loading the boat on this particular contract as well. That's the far out of the money contract we have, 200, and that's it. That's great. So these are the three ideas that I have for you on Apple to play, looking forward to the end of the year, end of 2021. I still think you have to consider that we are in a position that we have to think, if we don't have a break, okay, if we don't have a break under 145 per share on Apple, we're still bullish, and we have to take these opportunities in the short and medium term as opportunities to buy Apple. Now, rather than look for only 20% appreciation on equity, I advise you, want to guide you understanding your risk profile, that if it suits you, you don't need $150 per share. You can do it with $43. You don't need $150 per share. You can use $20 per contract. And same thing here, you don't need to allocate $150 per share. You can take $35, $40 per share and go with the 200 call December 17 expiration. Again, the 200 call, that's the strike price for December 17. And all you have to do is take $34 to $40 from your pocket to look to maximize your capital. That's an Apple, right? So this is my free trade idea for this week. I'd like you to come back. There will be more information in how you can do this. But remember, if we're in a bull market and stocks, equities, they look inflated, then buying options, strategies with options will be the best way for you to maximize this bull market. As usual, on the description of this video, there is a link. The link will redirect you to a broadcast where you can learn more about my strategy, SDF, Statistical Disruptive Flow, how I use it, how I look for asymmetric opportunities like AMD, 700 to 900% for members, community, the entire community of Profit Flow Group in about 4 months. For example, Apple, 700%, 500%, how we did that. When everyone thought there was coming another crash, everyone saw living on suffering and fear that the markets would reverse. We took advantage of Apple at that time, taking 200%, 500%, some members from our community, even 700% on that particular trade. How do I do that? What's my process? Well, then you ought to watch that broadcast. And let me tell you a secret. It's totally free. So I thank you for watching. I like that you come back and get more of this information. We can argue all day. If you have questions or you want to argue about what may not happen with Apple, hey, there's also, leave some comments. I want to hear from you guys. And let me know if you want me to talk about another stock. I will come with another video by the end of the day where I look at specific levels on stocks that you want to pay attention. Thank you for watching, guys, and I'll see you in the next video.